All right, morning everyone. Let's get going. Okay, last night's session in the States was looking a little bit ugly there in the first maybe 2 hours, hour and a half, 2 hours of the session. You can see we immediately just started to aggressively sell off within that first hour and a half period. I think we got down about 14 and a half, 14 or 15 points on the S&P future. It's the lowest that I saw. We started to settle out a little bit from there, and then we literally just kind of grinded higher for the rest of the day. So, I think it was another good result for the bulls. The fact that the market wasn't able to correct any more than that. We continue to see the U.S. markets just be able to outperform, which is quite spectacular. Other than that, in the States, we did see maybe Priceline that was under a little bit pressure after a sales forecast was disappointing. Sprint under pressure as well. Factory orders came in line, and then we had the trade gap was a little bit wider than expected because of exports falling. And I thought, I was kind of thinking that was getting markets a little bit worried. That combined with lowering targets for the European GDP, but the U.S. market still managed to just kind of hang on and close moderately lower on the day, which I think was a good result after the way that it started. If you look at Asia overnight, most markets were lower outside the Nikkei. The Nikkei continues to just tack it on after the yen weakens almost on a daily basis. Some guys are talking crazy targets on the dollar yen. Some guys saying as low as 150. So that's obviously boosts the exporters on a daily basis when that happens, and just because that's such a big part of their market, the market just can almost not go down as long as the yen's weakening. Outside of that, we did see some PMI numbers out of China, again, soft. We continue on that same theme. Out of China continues to disappoint. That's a 3-month low out of the Chinese PMI. The construction companies, real estate companies, that sort of thing, under pressure on the back of that. In Australia, we also saw a little bit of weakness in the mining stocks. Same sort of thing. Same sort of theme we pretty much see on a daily basis is that the mining stock soft, China soft, U.S. outperforming. So I think that in itself is going to end up creating some long-term opportunities for us, simply because the market is getting so used to seeing the same sort of thing. So when that changes and changes significantly, it could be really interesting. All right, next chart here, chart of interest on the day. Alibaba, as of the last 2 days, as of yesterday, has popped up above Walmart in market cap, which is pretty friggin' spectacular when you think about it. With the Walmart's market cap at 248, when we IPO'd on Alibaba, we were at 168. We're already at 257 yesterday, new all-time closing high after numbers out of Alibaba. And they're doing that with Walmart actually having 40 times the quarterly sales of Alibaba. So that's quite a multiple. Anyway, all right, moving on to corporate action today. We have Harmony numbers that are out kind of in line with expectations, more or less. I mean, revenue a hair soft, but other than that, everything almost dead in line. We've got Old Mutual with its quarter 3 sales release coming out at the open. Then later in the States, we've got Time Warner, we've got Qualcomm, and then after the bell, we've got CBS. Right, in terms of market data today, we had the Japanese monetary base, which came in a little bit higher than prior numbers. Like we said, soft on the China PMI numbers, same sort of thing we keep seeing there. Locally, we've got the finance minister speaking as we speak. Then we've got PMI numbers, services PMI numbers coming out across the entire Eurozone. We've got retail sales in Europe as well. And in the States, we've got mortgage apps, unemployment, the ADP employment change, also services PMI, and ISM non-manufacturing. So there's quite a bit of data on the table today. But I think one thing that's important to note on today, I read a couple of days ago, is that the day after the U.S. midterm elections is historically the best trading day of the year. when I say the best trading day, I mean the best performance of the year in terms of averages. So I think that's one of those things that doesn't make a difference who wins. It's just the fact that the uncertainty's over. Now the market knows what it's looking at and can start to make decisions with a little bit more confidence going forward. So, that kind of proves the point of the market's hating uncertainty, and so that's exactly what we're looking at today. We've got the S&P future up 8.5 points, FTSE future up 41.5. So just be careful, the markets could really run, for no real particular reason. Okay, first thing we're going to look at here again is spot gold, which I know we've looked at several times, but I just wanted to go back and revisit it one last time because this is a really, really significant chart in my mind in terms of, I didn't draw that very well, but this is a long-term structural chart here that has totally broken down. We've got a real descending triangle pattern here that has, the bounces have just gotten smaller and smaller off of the 1180 or the 1200 level. We've totally gotten dropped that and dropped it convincingly now. And I really think there's a a significantly lower target. I think we're going to go down and test $1,000. We've already fallen $20 overnight, and I think there's a hell of a lot more meat on the bone. So if this is some sort of trade that you have access to, I really think that there's probably a lot of meat left on it, shorting the physical gold price. The gold shares have probably done a lot of their run ahead of this move. So you have to be a little bit more careful out there maybe with the gold shares now, but I think in physical gold, I think there still could be a lot left on it. All right, let's look at CFR. CFR, had this little inverse head and shoulder that we broke out of the neckline, but now it's really starting to look like it's failing a little bit after yesterday. I'm going to draw this from the close, from the closes here, and we've almost got a little bit of a bear flag going here, but either way, I think that we're approaching a level where we could really see some further downside if we fail. Where we closed in Switzerland last night is about 90.15 equivalent, and I think that 90 is a big level. You can see there we've got 1, 2, 3 closes right at 90. We have a gap down to 90 here in the morning on early October, and so I think 90 is a big level. If we drop 90, then I think you've got to get bearish again on CFR. All right, if we look at Sasol also very, very soft. We've got sorry, wrong thing I clicked on here. We've got a major level also in Sasol. I would call it 142, 141 and change, somewhere there. Let's just have a quick look at that. Sorry about that. Let's look at that low. I think we need to drop this day's closing low for us. Okay, so we closed at call it 541. We closed below 541. If we can just get below 540, I really think that Sasol can really start to unravel. But if we close below 541, then I think the momentum's really going to be on the downside. I think this move in the oil price caught a lot of people off guard. When you start to look at the margin compression for most of these players, it's starting to get quite hectic now. I'm not 100% sure what Sasol's average cost to produce a barrel of oil is anymore, but I would assume that it's risen above kind of where it was several years ago, which is around $45. So this is definitely going to come in. I think if we drop 540 here, I think there's a quick $20 to $30 of downside in Sasol, so just be careful out there. Some guys probably have been caught on the wrong side of this as well. All right, let's look at Remgro here. Remgro taking out all-time closing highs. We haven't taken out all-time highs yet. We basically traded right up to all-time highs yesterday on the wick at 257, but we took out all-time closing highs actually the session before. So I think we've got to keep an eye on this one. There's a couple of our stocks that have just made this huge V-shaped recovery and are breaking out. FirstRand, Sunlam, to name a couple that come to mind. This thing could be coming right behind it. If our market trades well, I mean, this thing's probably going to keep going from here. But looking at that in the same light, if we were to turn lower from here, it'll look a hell of a double topish. So just keep that in mind and watch what this thing does going forward. There could be some big moves still to come in some of those stocks. All right, next one we'll look at is Telcom. Telcom is really, yesterday, you can see intraday, we popped up and tested this resistance level at around $62, only to fail it and close right on the lows. It's actually a shocking reversal. I wouldn't say that we didn't make a key reversal because we didn't get below the previous day's lows, but a reversal nonetheless. I think, the way this thing's been, going vertical from 50 to sort of 62 level, we might, if we do get below maybe Monday's lows, then I think we could potentially be a nice short here in Telcom. Right, and the last one that we're going to have a look at today is on the LSE, and that's BP. BP totally dropping out of a flag pattern. That was a shocking line there. Anyway, you're dropping out of a real steep bear flag here and real narrow bear flag and dropping it hard. I think that this is probably going to come down and retest the lows in the coming couple sessions. I might look for a second day play out of BP today. If you're so inclined to play the UK markets. And that's it for today, guys. Good luck out there.